to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the possibility of USD JPY breaking out on the upper side after a false breakdown. We are seeing this consolidation happening in the USD JPY for almost a month now, and I think after this due consolidation with underlying bias still remaining on the bullish side, we can expect a breakout on the upper side, and we will see the possibility and the optimum levels to exploit this situation to our advantage if things work out as per our expectations, our anticipation, and if not, of course, the stop loss will be there. Now, coming to today's trading context, we are seeing protest happening in the United States for almost 3 to 4 days now, and this protest which started after the death of Mr. George Floyd in the police action, and now these protests are continuing as people feel that this racial discrimination should come to an end, and because of that, the situation remains volatile in the US. And the concern is also that because of lack of social distancing and other measures, there might be even a second wave of the virus outbreak, which has already impacted the US heavily, and now the protest is again adding to those concerns. So we will see how the situation evolves there. On the data front, we are scheduled to get the ISM manufacturing data, and here, even in the European trading session, we got the final PMI numbers for the European countries, including Italy, France, Germany, and Euro area as a whole. And as expected, we saw the numbers which are slightly better compared to the April's reading. So here, the PMI readings range in 40 to 45. The highest reading is for the Italy, which is at 45.4, and the lowest reading is for Germany, where the PMI reading is at 36.6. And this basically shows that all the major European economies are still in the contraction phase. Only the difference is between the severity of this contraction, where Germany is still heavily impacted. Even for the United States, we are not really expecting any significant improvement in the manufacturing sector. The PMI reading for the month of May might slightly go up to 43 compared to 41.5, and that will mean that it is still in the contraction phase only. Just that the pace of contraction is slowing down, and unless and until the economy opens up to much larger extent, we are not likely to see the manufacturing PMI getting back into the expansion zone. Now let's move on to the technical segment. First of all, we will see the technical picture for the USD JPY, and then we will consider the gold, that is XAU, in terms of USD. Let's start with the USD JPY's technical outlook first. This is the daily time frame chart, and this consolidation which has kept the USD JPY range bound between 108 on the upper side and 107 on the lower side. We saw this low being made closer to 107 on the Friday, and from those levels we saw equally sharp up move as well. On Friday, we had two major market moving speakers, of course, Mr. Trump and Mr. Powell, and that, as we were expecting, the things did turn out volatile, and we saw these topsy-turvy moves. But now the underlying bias seems to be shifting on the upper side, and even in today's session, we are seeing the revival in USD JPY after making a low close to 107.4, and now the momentum has been brisk on the upper side. So even if we consider these bullish crossover of 10 and 20 EMA, it is still pointing in the upper side, and we can expect the upside momentum to continue at least for some extent, and we are even looking at the possibility of USD JPY moving toward the immediate swing high of around 109. So we will see how we can exploit that if the things were to turn out as per our anticipation. The volatility, though elevated compared to the historical levels, has significantly reduced compared to this month of March, where it was even around 1.8, that is 180 pips. Now it is at around 60 pips, so one third of March volatility now. Coming to the 4 hourly chart, here we have this important support of pivot point series around 107.32, and if we consider the resistance on the upper side, we don't really have any significant resistance, at least till 108.66. As you can see, the immediate resistance is of course of only these swing highs, the immediate swing highs established around 108. Apart from that, I don't think if we get a break on the upper side, the USD JPY might even go on to rally towards 109. So that is a possibility here, and we are not really seeing a breakdown on the lower side. And even if we consider the momentum, the underlying momentum that has been pretty strong, and this extended consolidation where the range has been pretty narrow, just within 100 pips. And if we add this formation of higher highs and higher lows, then that also points to the momentum being on the bullish side. And not to forget the regression curve. The regression curve has bent on the upside for almost 2 to 3 weeks now, and here also, though the price action is now in the lower trajectory, lower band of the regression curve, but still the momentum remains there, and unless and until we see a clear breakdown below this immediate support zone of the central pivot point, which is there around 107.3, I'm not really expecting a breakdown on the lower side. So watch out for the USD JPY's price action here, and we can continue to look for the buying opportunities as long as the price action is still concentrated in the upper band of this standard pivot point series for the month of June. Coming to the hourly chart, this is the range which we have been talking about for last two slides is going to be a defining factor here. As you can notice, the USD JPY after this false breakdown reversed and came back closer to this immediate swing high, and from there on it reversed the gains, and even at one point in time it was looking like that it might even go on to touch this immediate swing low, but that didn't really happen, and we saw this immediate turnaround after making low closer to this 107.4 levels, and now it has again come back to trade above this 200 SMA. And here we have this confluence of 50, 100 and 200 SMA, which is likely to act as a immediate support for the USD JPY. So unless and until we see a break on the lower side, and then it should also spend considerable amount of time below those levels. So till then, I think if things hold well, and if we see that USD JPY is able to sustain its newfound strength in the European session, and if it consolidates for next couple of hours above these 200 SMA levels, then I think we are pretty much likely to see USD JPY getting back towards the immediate swing high, and also try to break out on the upper side. Then, as we discussed during the 4 hourly chart as well, there is not much of a resistance unless it reaches 108.6 levels. So looking at that possibility, I think we should here focus on this confluence area of around 107.5 to 107.7. So this is a 20 piece price band, and it is going to be fairly crucial for us to determine whether to go long or whether to sit on the sidelines. I'm not really suggesting going short at the current levels. So rather than that, you can prefer to sit on the sidelines, or then if things work out well, and if we see more and more time is being spent in this price action, concentrating above this 200 SMA, then I think we should pretty much get involved with target for partial profit booking. We can utilize this, and also for partial positioning. Position can be kept, can be left open till 108.6 levels are reached, or even beyond that. And I think today's low, which is closer to 107.35, can be good enough as a stop loss. If we see further break on the downside below that, then I think pretty much we should give up on the hopes of revival happening, and it might even go on to retest these immediate swing lows. So here the key is that we try to get involved, we try to get buy position closer to 107.6 to 107.5 levels, and then we keep the stop loss just little below the immediate swing low, and while keeping our stop loss target price at least around 108 or even beyond that. As I said, we can think about booking profit in half the position while allowing the half the position to remain open. Now let's see how things are shaping up for the gold. This is the daily time frame chart, and these sharp moves which we are seeing in the gold are pointing to the strong bullish momentum. And now, even after rallying extensively of around 300 ounce here, gold still remains with the bullish trajectory, and this reversal, which happened here just last week, is a marker to the fact that gold remains on the bullish side. And even now, I think it will be more profitable if we think about buying gold rather than selling it now. Of course, it has seen this considerable rally, but still the momentum remains strong, and because of that, it is beneficial to focus on the upside in the gold. Now, coming to the standard pivot point series, here we have this immediate support zone concentrated around 1722, and that is the price zone. I think we should keep a watch on. The price action of the gold is not exactly close to that, but even if we consider it from this classical view of anything above this central pivot point is in the bullish zone. So from that perspective, the gold is pretty much in the bullish zone, and we should be looking for the buy opportunity here. And even here you can see that formation remains of higher highs and higher lows, and after consolidating, and this is the flattening of the regression curve. Now the regression curve is again steepening on the upside, and that is also a possibility which we should not overlook here. And I think as long as the price action is above 1722, we should be looking for the opportunity to go long here. And on the hourly chart also, we can see breakout above this downward trajectory, and this consolidation which was happening around 1720 has now given way, and we saw new high being made just little above immediate swing high. Now this crossover of 50 above 200 also indicates the golden crossover, and that means that bullish tendencies are taking hold of the gold's price action. And as this crossover is getting confirmed, I think we have one more factor which might give us confidence for possible trade on the long side, and this 100 SMA which is there around 1720 can be our support zone on the lower side, and we can just keep our stop losses just little below this immediate swing low which is there around 1710. So here currently the price action is concentrated above this 200 SMA, and that is something we can exploit. So I think buy entry anywhere between 1725 to 1735 would be a good idea, and then our stop loss can be kept just closer to 1710 or even a little bit below that. So we are taking a risk of around 20 to 25 USD per ounce, and in return we will have to target at least 50 USD per ounce on the high side. So naturally for us the target would be closer to this first resistance of the this month's pivot point series, and that works out closer to 1775. And if we are taking a risk of around 20 to 25 points, then on the upper side it's natural that we target at least 50 pips to 50 points to cover the risk. And that's it from my side for today's session. If if you have any idea or any thoughts to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. See you tomorrow. Have a fabulous day ahead. Goodbye.